Aloha, everyone. How about this market? Pretty insane. The rally continues unabated, no sell off, no pullback, no consolidation, just straight shot to the moon. Now, I got to be honest, before I made this video lesson, I expected to look at some extreme readings of bullishness across a lot of I guess, the AAII survey, the II survey, the NAIIIIM, I'm just kidding there, survey, the seen in fear and greed. And while it is extreme, while it is, you know, very, very bullish out there, it's not super extreme. It's not like the extreme greed on the seen in fear and greed indicators at 78, I believe. It can go to 100. So I mean, we can go a lot further. That being said, we are coming up on the third seasonally worst period for stock market returns going back to 1950. It starts in February 15th and it goes throughout the third week in March. So we're getting closer and closer to the point where, you know, with the market moving the way it's been moving, it shouldn't surprise anybody if we have a down 2-3% day on huge volume that then turns into a more prolonged pullback. But either way, the market is so bullish. Things are so good right now, and the economy is hot, beyond hot. And all of this is happening during quantitative tightening and the Fed running off and selling off assets on their balance sheet. So I remind everybody, I would love a pullback. Uh, it would be amazing to get a pullback, some kind of normal price action. And to be honest with everybody, if this is indeed, which is the only time period that I can see it correlating to 1994 to 1995, I wasn't trading back then, so I've never quite seen a market like this. But we're not even in inning one yet. We haven't even cut rates, and we're at all-time highs. And I happen to see a statistic on the SPY that the 50-day simple moving average of the SPY, the 50-day simple moving average, was at new highs. That's insane. It's amazing. So, in this video lesson, we're just going to go over two indices, and then I kind of have an add signal for everyone. I don't have any new long signals. Everything's basically an add signal that I got on Friday. There's 3 trades that I want to take on Monday. They're all add signals. One of them, uh, I'll give everyone the best one. But first off, I just want everybody to look at the IWM. You can see here on this chart, you clearly have this base, a breakout, and even though we have undercut it, so it's kind of like a V-shaped cup with high handle. And if this low would be above here, we call it a base on base. But either way, however you split the hairs, whatever you want to call it, it's consolidating again. And what you're looking at is a daily time frame. And during this consolidation, what is holding above the zero line? The tickets indicator. What has just flipped green? The time segment volume. The tickets indicator hasn't even started to stair step higher yet. We are also coming out of a slingshot, squeeze, and the momentum is now pushing higher. It's kind of difficult to see no matter what I do, but you can still see. We're pushing higher, we're green on the daily. So while the SPY, QQQ, and DIA seems like it's extended, it looks like the small caps just want to get started. And then of course, if I go to my higher time frame, which I always do, I want to make sure that it's aligned with that lower time frame. When we do that, we can see the IWM is clearly consolidating, and after doing that base on base, cup with high handle, whatever you want to call it, move, you can see we had the slingshot and the squeeze. We've resolved higher. The trend is moving higher. The longer term tickets indicator reclaimed the 1 level, or the zero level back in December. It's stair stepping higher, and unlike the daily time frame, that stair stepping, it's just starting above the zero line. And we already have TSV green. So we're aligned on the higher time frame and the smaller time frame for the IWM. And like I said, before we ever top, we could go a little bit. Now, what I want to show you next is the first signs. We've already showed you that last week's video lesson that the SPY is riding is above the 3 ATR, which is insane on a weekly time frame. But it doesn't mean that the market has to pull back. It can continue to ride that 3 ATR as we have seen. And until we actually crack and sell off on heavier volume, that negative 2-3% day that I've been talking about, there's no point in anticipating it. There's no point in shorting the market. But once again, we have hints that we are getting near the apex of this short-term uptrend. And I want to show you that via the VIX. So what I'm going to do here, change my time frame to 5 years. Because here, I don't look at this a whole lot. And if somebody wouldn't have brought it to my attention, I wouldn't even have realized it. Okay, let's go in. So back here, before the VIX explodes higher, you can see that the trend, the momentum is moving lower. And then you can see that this red bar goes yellow. We start to trend higher, warning that this move was coming. But once again, look, we got the flip to the yellow here. 1, 2, 3, 4, 5, 6, 7, 8 weeks later, we finally start to move. But it's another hint, right? It's another little warning that we might be trying to reverse. We get the same thing here. Flips yellow. A few weeks go by. We pop. We continue to pop. Right here, we're basically red. We start to have consecutive yellow bars. Do we pop immediately? No. But eventually, we get that pop. See, those over there kind of mask it. Sorry. So that gets us a little bit better close up. And then once again here, we go yellow, pop. Red, 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 red. We go yellow, pop on the VIX. And every time the VIX pops, obviously, if you understand how the stock market works, if you correlate it to the SPY chart, the market goes lower. Here we go again. Red, 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 red. We go yellow. Not a big pop, but a mini pop. So it's there. So that takes us to today. On the weekly time frame, red, 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 red. This week, yellow. And as we've seen, we can go a month before we pop, and that would coincide with a continued market melt up, possibly taking the IWM with it. Or, as we head into February 15th, negative seasonality comes into play, and the VIX is yet another warning sign that that negative seasonality is coming. I, once again, will not fight the uptrend. I will continue to trend join it, and I pray and hope for a pullback. But I'm on alert, and I'm ready for the first signs of the market to crack, to be very aggressive with my trailing stops, to take profits, which I have been. There's so many stocks that are making not really parabolic moves, but they're making semi-parabolic moves that I start taking profits on. Obviously, we always trim and trail. Let me go back to a daily time frame, just one that comes up to my head really quick on the speculative side. For instance, think we got long here, trim and trail, take some profits, take some profits, take some profits, take some profits, and all along the way, you're trailing up your stop, right? So what happened this day? Bam. Now, on my remaining shares, where do you think half of my profit stops are? 1 cent below this candle. And then I have trailers back to where the trade is break even. Because it's up so much, we're not going to let any of the piece go red. So that's the way that I do it there. Now, with all of that being said about the market, like I said, it's not going to size into anything here. I don't have any beautiful, amazing grade A setups here, but I'm still getting long signals. And I got an ad signal, CRDO. So I'm not sure when I made this one a long signal. I think it would have been this bar here, this breakout of this pattern here, and I didn't love it either here. No surprise, after initially working, because of how far it's extended, we had to pull back a little bit. Since pulling back, we're breaking out again. Obviously, where this white line is the ideal pullback spot for entry. But if you want to get long strength, you can add to the position just like I am. So the high on this candle is 2270. I'm going to have a buy stop at 2271. A limit offset probably up to 2295 on the position. But here's what I'm doing. Because it's so extended, because we are coming up to that bear seasonality, normally I would calculate my size and risk to this level. But in this market, I'm actually going to size in, calculating my size from all the way down here. Now I have a different telechart version and there's a reason why. It has to deal with the balance of power and the candles and the volume profile. But I'm going to calculate my size because I'm already long and I have profits and I don't want to size in too much where it kills my dollar cost average. From here to here, and my final stop on the position will be 1 cent below this low a day, 2009. So sizing in from here, final stop here. Now I want to make it clear. If this base was this long, that you see me drawing the arrow, and then we had this breakout above the highs, and let's say the base wasn't just 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 15 days, but instead was 150 days, now we're probably talking, I'm sizing in, calculating my size from here, final stop would be there, but I'd be willing to like let it pull back here before I even consider taking profits off the table. Now with CRDO, if this trade fills, and let's say it does not move higher immediately, let's say that it stalls out. Here was an instance on Frog, which I gave everybody here. Was it last weekend? 1, 2, 3, 4, 5. Yeah, so last weekend I gave you guys this trade. Perfect, right? But right after getting long, it worked on day one. We had this candle. I immediately moved half of my stops, 1 cent below this low a day. And this never happens. I never get lucky ever, but I got lucky. And they didn't run it this day, and all is well. And we're back to trimming and trailing on the way up. So CRDO is your ad swing for the weekend. VIX is hinting us at a warning that we should be ready for a pull soon. But the IWM says, I'm ready to take the lead.